even in my hometown, just recently, just as an example of this, um, the city council now is kind of looking at this new kind of zoning law. So they've watched the price of housing in my hometown just rip about 40% since kind of pre-pandemic levels. And they're looking at this, and in a vacuum that would make sense. It was like, okay, well, that's a housing supply problem. So housing's getting too expensive because we obviously have a supply problem. We need to increase the supply of housing. So they're looking at rezoning so that they can, take single family homes off the table and maybe be able to build multifamily dwellings or duplexes, et cetera, to try to increase the supply of housing. Meanwhile, if you look at the numbers of what's going on, um, housing has increased in price about 40% since pre-pandemic levels, but the population of the city has actually decreased by 2% over that same time frame. So it can't be a supply problem if the actual population has decreased, but we're so conditioned to just not look at the money as the problem. And the way I see this is, it's one thing for somebody at a cocktail party that has nothing to do with the actual city council or something like that to have just kind of a flippant, uneducated guess as to what's going on. But somebody that's actually tasked with understanding the problem and fixing the problem, if they're that far off target, it just shows you how conditioned we are to never look at the money as the problem. And we just, so even the people in charge of solving the problem don't see the problem. And I think that just kind of shows you how early we are. And I think that's kind of a parallel to the JP Morgan just waking up the debasement trade. These guys are monetary experts. They follow markets for a living. They're supposed to be out there telling other people how to manage their money. And even they don't see the money side of the equation. Like, it's just fascinating to see the experts not be as read in as just the rest of us in the Twitterverse that have just been following this money problem and cannot unsee it. It was like, for us, we see, like, when I looked at that housing supply problem and I look at the unaffordability of housing, the money slaps me in the face like a cold fish, but somehow the experts don't see it at all, which is just really interesting.
It's it's really interesting because if you look at mainstream media and you look at all the things that are going on and you hear those experts in media talking, and then the question is like, oh, like, what do you expect for inflation? Why do we have that high inflation? Austria is in Europe a kind of a special kid because we have in Europe a high inflation, but in Austria specifically, one of the highest in Europe. And so people are asking, like, oh, why do we have higher inflation than like in other European nations? And there is never any talk about the money. There's never any talk about why we even have inflation. What this inflation even means. The only thing is like, oh yeah, like there's a supermarket thing going on, like, and there's like this energy thing, and oh yeah, there's war. And I'm like, yeah, like, this is true. We have those things going on, but did you ever consider asking why energy prices are higher? Like, of course, if energy prices are higher, this drives up inflation. But have you ever asked like why the energy prices to begin with are high? And then my most annoying argument is when they're coming here and saying like, "Oh yeah, there are a lot of greedy corporations making a lot of profits." I'm like, where did this come from? Like, how the heck is that coming from?
Yeah, well, I think they've always, I mean, in their defense, I guess, right? We've always been told by particularly the people in charge, our leaders are unwilling to say that the money is the problem because that's the part of the equation that they're in charge of. So they're going to point to everything else as causing inflation except for their own mismanagement of the currency. They're obviously not going to point everyone to that because then that once they admit that they see it, they're responsible for fixing it. So the way I also drives me crazy because I come across that all the time as well. This idea that greedy corporations are what's making our life hard, is what's making inflation rip. And it's not that corporations aren't greedy. I don't think that argument could be made. And we're all kind of greedy if you consider greed just being kind of economically self-interested. I like to tell people, well, you might be willing to do whatever job you're doing. You may be willing to do that for a little less money, but you're not going to go in and tell your boss that. So does that make you greedy that you'd be willing to maybe work for 10% less, but you're not going in and telling your boss? I was like, hey, boss, you're paying me too much. So, I mean, corporations are just like us. They're going to get as much as the market will bear for the product that they are selling, and that's just normal supply demand economic dynamics, that they will charge what the market will bear. And it's like there's an equilibrium point where if the price goes any higher than that, they'll sell you less units. So they're going to do just what every individual economic actor would do. I think the question is, okay, if this is greedy corporations, why is it increasing at an exponential rate? Because I think corporations have always been greedy. Corporations were greedy my entire life. They were greedy in the 50s, their 60s, 70s, 80s, 90s, 10s, like to today. They've always been greedy. That's a constant linear thing that's always been the case. So if that's the case, then why is the inflation accelerating? Why is it exponentially accelerating? Are we supposed to believe that corporations are getting exponentially greedy and they're getting greedier and greedier every year at a compounding rate? Or is it more likely that it's the empirical math of compounding interest that is forcing the money printing to increase, which is forcing the inflation to go up at an exponential rate? So I would say that corporate greed, it's not that it doesn't exist, it's just that it's fairly linear. And when we're looking at an exponential problem, you need to look for an exponential driver, and the exponential driver is the money printing or the debasement. So
and I always ask people the same question. Okay, if it's greedy corporations, ask yourself the question, assuming there's no monopoly, like if there's in a small market some kind of monopoly, of course, like maybe they are greedy and then charging way too much. Like if there's a monopoly, this is never good for the market, because then there's like one corporation that can just set the prices. But most markets actually have a lot of competition, and most markets are actually not a monopoly. They have a lot of competition. And so if there are multiple competitors in there and the people can no longer pay the prices, this naturally forces the prices to come down from a natural market perspective. Because if everyone just charges more, at some point one will be like, oh, we have so many profits, like we are overthrown in cash. We can just like lower the margin a little bit and then actually make more profits, because more customers will come to us instead of the competition. And because of that, we can actually lower the margins more, because like economics of scale and all of that. And so then you don't have greedy corporations, because there is competition and there's price pressure and there might be commodities going on. Again, if there's no monopoly, and in most markets there's not a monopoly outside of like governments and central bankings and like other things like that. So it is this argument is so simple. And like I think it's like an easy answer for people. It's like, oh, of course they are greedy, like that's why in inflation, and it gives them like kind of an easy target. You can just like, oh yeah, greedy corporations, and they just want to make profits, and they're shareholders, and they're so evil. And then it's like, yeah, but like, have you looked at like what you just said? Like is so amazing. It was like did it just get greedy in 2025?
yeah,
Like,
right.
is it this the year where everyone just like, oh, I'm greedy now? Like now they woke up and being greedy. So like, this is completely nonsense. But I'm really curious what you say about that, because I feel like mainstream is kind of waking up to the idea that there's something wrong with the money. I see it now actually with my friends that actually friends that are not in Bitcoin are asking now more about like, oh, I heard this one guy on the internet telling us that the money might be broken. So, and I always like, oh, like who was that? And it's actually sometimes like not even Bitcoiners. So now this idea that the monetary system is broken gets spread actually quite fast and outside of only Bitcoiners talking about that, which is kind of interesting for me to see. And then we have JP Morgan, as you said, like the debasement trade. We have really big people that say just like, hey, like we need to have hard assets. And in the last 2 years, hard asset was the big winner, gold and Bitcoin. Everything else kind of lost. Jesse Myers like makes a great analysis on that. what happens actually right now when we have TradFi and Wall Street kind of waking up to that and telling also I mean, even Larry Fink talks about that, the flight to quality, which is crazy that he's on board with that. What happens in the next 5 years? Because it seems like the way mainstream actually is waking up to that reality.
Yeah, man. I mean, I think it's just the inevitable march, man. I think Bitcoin is just mathematics and it takes no prisoners and it just continues to, gain ground with the passage of time. And I think that is just what you're seeing. I think you made a great point about, you know, greedy corporations should bring prices down, right? I mean, if they're being greedy and they're trying to gain more market share, this is kind of the Jeff Booth idea that the normal, state of the free market is to bring prices down. But monopolies, obviously, that's always kind of in economics. You always look at a monopoly kind of as a theoretical because, you know, monopolies can't really exist without government protection in a true free market. But, when you really look at who does have kind of price control, it is a monopoly. And the biggest monopoly we have is government. And the biggest problem that they have is that they've always had a monopoly on the money supply, which meant you could be as hubristic with the money supply as you wanted to be. You could be as coercive and abusive to the people that have to pay taxes and have to work for those wages in that fiat currency as you want to be, until that there's actually competition entered into that market. And I think what Bitcoin is doing is it's entering competition into money for really the first time in a way that cannot be manipulated by the powers that be. Because I mean, you could say gold, but gold kind of failed for reasons that, Lynn Alden's Broken Money does a great job of breaking down about just not being fast enough for a technological economy, being prone to centralization. Central banks centralize the gold. And now that even gold is ripping, the main buyer of that gold is central banks. So they're still mainly in control of that. But Bitcoin is kind of this new monetary instrument that they just cannot get their hands around. They cannot control. And I'm sure you saw Christine Lagarde, the European Central Bank head. It's been really interesting. She was just recently speaking about how basically saying that democracy is great. We love democracy, and the but was we don't have enough time to basically implement a central bank digital currency in a democratic fashion. And when I was listening to that, I was like, well, okay, well, what's the rush? Like, why don't you have enough time? Like, what is around the corner that is so existential to your monetary monopoly that you don't feel you have time to go through a normal democratic process to implement a central bank digital currency? And what they won't say out loud is they know that their monetary monopoly is breaking down. They know it's breaking down, and Bitcoin is the reason it's breaking down, and it's moving too fast for them to really control, and it's moving too fast. They're losing control in real time. So they feel this existential need to basically overarching in a non-democratic fashion implement a central bank digital currency to try to maintain control. And to me, it just feels like a caged animal that has just run out of options and is just lashing out with this kind of agonal breath of trying to maintain their kind of authoritarian control over money. I think what's happening, the reason like the debasement trade, it's this kind of inevitability that this monetary contender has entered the arena and just has to be dealt with. And I think you've kind of seen this on every layer of the cake. It's kind of just like individuals usually dismiss Bitcoin out of hand initially, and then kind of it becomes inevitable in their eyes, and then they bend the knee. And we're watching kind of that middle layer of kind of the corporate financial world. They also tried to dismiss it out of hand initially. All these people that are finally coming around to the debasement trade were the same people that were telling you that it wasn't a problem, just a handful of years ago. And we're basically telling you that Bitcoin was BS or Bitcoin was a Ponzi or Bitcoin would never work. They're all starting to pivot. They're all starting to accept it because Bitcoin has this way of if you cannot destroy it, which you can't, we know it's super decentralized. It has no central point of control where they can go and lean on and actually exert influence. If you cannot kill it, you have to join it. It just has this game theoretics where if you can't kill it, you have to join it. So I think we're seeing that happen at the Wall Street level now, where all of these, gold bugs tried to meme this, tried to get people to say fiat currency for decades, and nobody cared, nobody would. Bitcoin shows up on the scene, and suddenly fiat currency is a buzzword. Everyone says it, everyone uses that term, everyone knows what it means now. And the debasement trade, the whole idea that they're debasing the currency and they cannot stop. Nobody talked about that. Even, I mean, I talked about that 10 years ago when I was writing papers that nobody would read. Now it's on Bloomberg, it's in the Wall Street Journal. So it's kind of just this inevitable march. And talking about the next 5 years, I think that inevitable march of mathematics as Bitcoin grows, it unlocks new players and it unlocks new levels of this game, and it continues to encroach on different parts of the monetary universe. And I think in the next 5 years, I think the next level is going to be that nation state level, because once you recognize or admit that the whole fiat kind of monopoly is a Ponzi that has to continue to print to stay alive, and so the debasement has to accelerate, the inflation has to accelerate, and the people are just they're still infighting. They don't really understand exactly what's going on quite yet. They're just blaming it on the other political party for now. They don't really understand the mechanics of what's going on. They don't understand that no matter who you throw the car keys to, that math is going to continue. But I think Wall Street is starting to see it. Finance is starting to see it. Corporations are starting to see it. And I think inevitably, once all these nation state actors, they know kind of that the game is up, like China's no longer buying treasuries, and just this little freak out market crash was basically Trump saying like, hey, we could just tariff you overnight at 100%. So like if we can do that and we can confiscate treasuries like we did to Russia, Russia's not going to buy treasuries anymore. China's not going to buy treasuries anymore. You start to see that all the buyers are drying up. Everyone's starting to see this game for what it actually is. They're starting to finally wrap their head around how it's going to accelerate, and that nothing stops this train. There's no bringing it back. It's kind of a one-way trip. And if it's a one-way trip that is already unsustainable and it's inevitably going to fail, and I think the next step is the game theoretics will cause a large nation state. I happen to be in the United States. I hope it will be the United States. But a large nation state is going to realize that the old game is over, the new game is here. And to win that new game, just like strategy understood this at the corporate level, to win that new game, the play is to go first and go hard and build an insurmountable lead. And I think the game theoretics is going to cause one large nation state to do that. And then if that happens, if and when that happens, everyone else is going to have to follow. They're going to have no choice.
Thank you for watching this video. This was only a snippet of the podcast. And if you want to watch the full episode and get all of the context of this episode, you can click right here or here. Oh, maybe also here.